All right, hello, and welcome back to the Broken Business Models podcast. We are your hosts, Ryan and James. And before we get started, just a quick disclaimer how we start each of these. Nothing in this podcast should be taken as investment advice. James and I could have positions in any of the stocks we may mention today, and we reserve the right to change those positions at any time. So always make sure to do your own work and consult with a professional before making any investment decision. With that being said, the topic of today's podcast is going to be the Q3 earnings results of PureCycle Technologies. Just a quick reminder for those of you who might not be as caught up on the story, PureCycle Technologies is a company where their business model is to use this technology that they have to create high quality recycled plastic from recycled material. So the idea is that they have this new technology that can supposedly create very, very high purity, virgin quality plastic out of recycled material, whereas existing kind of mechanical recycling techniques can only make, dark, opaque, not totally pure material that is not food safe, things of that nature. So they have this technology which was developed by P&G that uses extreme processing techniques to create this very, very high purity recycled material. However, they've had difficulties ramping it up and operationalizing it at an industrial scale. So they've had, trying to ramp it up to producing industrial quantities of this has led to problems with purity. They recently have had to compound their material with actual virgin plastic in order to get it to a sellable state, which we believe to be indicative of quality issues of their actual recycled resin. So this is translated to they've not been able to generate material revenue since they went public. Their revenue remains minimal. They've incurred quarterly net losses and negative free cash flow, and they've had to rely on continued dilutive capital raises in order to fund these losses. Going into 2025 and in Q3 in particular, since going public, this company has had a history of overpromising and under-delivering. They've had a series of milestones that they have made and subsequently missed. The most recent of which is a commercial partnership that they promised to have with Procter Gamble. So in their 2024 investor presentation, which they released in February of 2025, they said that they had a partnership with Procter Gamble in which they expect to be able to sell a significant amount of product to Procter & Gamble for use in Procter & Gamble's packaging materials starting in Q2 of 2025. So we're now in Q3 and these sales have not yet come, and they have pushed back their timeline for recognizing these sales to Procter & Gamble into 2026. So that's just the latest example of a significant milestone that they've had to push back and under-deliver. In Q3, their sales came in at $2.4 million, so very, very low, significantly below their guidance for what they said they were going to make in this quarter. Meanwhile, the cost of operating their main facility in Ironton was about $30 million, so that's about $120 million annually. Their total free cash flow in Q3 of 2025 was negative $42 million, so that's about $170 million annually. Against about $230 million of cash and equivalents that they had on their balance sheet at the end of Q3. That means that over the course of the next year, they're going to have to start making a lot more money or significantly reduce costs or raise even more capital from investors in order to get through the next year of negative free cash flow. So that's the situation that we find ourselves in at the end of Q3 today. With that, I'll kick it over to you, James, to talk a little bit more about the specifics of their Q3 earnings release.
Yes, thank you. So let's drill down a little bit deeper. So as Ryan just explained earlier, they recognized $2.4 million worth of revenue in the third quarter. So they first started recognizing revenue in the first quarter of 2025. In the first two quarters, revenue was extremely minimal at like $1.6 million each quarter. But then in their Q2 When they released Q2 earnings back in August, the CEO gave guidance saying that, oh, revenue is finally going to start to ramp up in Q3. So this is what he said at their Q2 earnings call in August. So this was already, halfway through the third quarter when this statement was given. With respect to exiting Q3, what we said is that we believe that we could exit Q3 at the $4 million per month revenue level. So they were guiding to $4 million per month $4 million in the month of September. Well, if you made $4 million in the month of September, obviously Q3 would be even greater than that. So they're probably guiding to, $6-ish million for the entire Q3. Well, as it turns out, the Q3 revenue number came in way below that at $2.4 million. So what they made in the entirety of Q3 was way less than what they were guiding to for the month of September alone. So clearly their revenue ramp up is not going as planned. So what is the cause of this revenue shortfall? Well, to date, it appears that their single largest customer was this company called Drake Extrusions. And Drake Extrusions, they buy PureCycle's recycled plastic. It's actually a compounded version of the recycled plastic, so it's not completely recycled. It's mixed in with virgin plastic. And then Drake makes fiber out of it. And then Drake will try to resell this fiber to, apparel, automotive, upholstery, carpet makers, etc. So when they announced their partnership with Drake, I think it was in late 2024, they hyped it up saying, oh, this is so great. Drake Extrusions is this massive company that consumes 60 to 70 million pounds of plastic per year. This is a huge opportunity. We're going to be able to sell so much to Drake. Well, it turns out when Drake went and tried to sell this recycled fiber to its own customers, there was what PureCycle calls long brand adoption cycle with highly fragmented demand. That's a nice way of saying Drake was not able to sell a lot of this recycled fiber to its end customers. The end customers were not interested in buying this recycled fiber. Now, there could be multiple reasons for this. We don't know the pricing of it. Maybe the pricing was very high and Drake's end customers were not willing to pay a premium for this partially recycled fiber. It could be that there were quality issues. Maybe some of the customers saw quality issues. But either way, the sales of this recycled fiber were much less than expected because end demand from customers was much lower than expected. And that's why we had this massive revenue miss where the revenue in Q3 was less than half of what PureCycle was guiding to. And remember, this guidance was made in August. So halfway through the third quarter, they were saying, oh, we're going to make $4 million in September alone, which would imply probably like $6+ million for the whole quarter. They made less than $2.5 million. So that's a huge miss. And it shows that PureCycle, they really have no idea what end demand is. Either they really have no idea what end demand is, and they were blindsided just within that quarter that demand from Drake was so low, or maybe they were just, putting out a fake number to try to get investors excited, saying that they're going to ramp up revenue. So clearly Q3 was a big disappointment in terms of the reported revenue number, but of course we also have to look at the future, and we also have to look at kind of new specifications that PureCycle has published talking about the exact specifications of their products. So if you've watched our previous videos about PureCycle, we spent a lot of time talking about their so-called compounding initiative. So the original plan for PureCycle was that they would get, the type of plastic is called polypropylene. They would get, this recycled polypropylene feedstock, and they claim that they have this process where they can make recycled polypropylene that is so good that it's indistinguishable from virgin, and that is called Pure 5 Ultra. Pure 5 Ultra is just pure recycled polypropylene. That was their original plan, is that they would sell Pure 5 Ultra. In 2024, they came out and said, they basically admitted, in not so many words, that there were issues, with the quality of the Pure 5 Ultra. So they're instead going to sell what they call Pure 5 Choice. And Pure 5 Choice is compounded. So they take some of their recycled plastic, the recycled polypropylene, and mix it with virgin polypropylene. And they have to do that to get to a high enough purity, because the Pure 5 Ultra on its own didn't have high enough purity. So to increase the purity, they had to mix it with virgin polypropylene. Despite the fact that they said, oh, we're going to have to do this compounding, mixing it with virgin polypropylene, that's the only way we're going to get to significant sales. Despite announcing this compounding strategy, they continued to claim that they would still make Pure 5 Ultra, and they said that they could still do it. But to date, they have not sold any Pure 5 Ultra, and to my knowledge, they have not signed any purchase order for any customer to buy Pure 5 Ultra. So they never sold any of this Pure 5 Ultra. But the idea was that the Pure 5 Ultra is supposedly 100% recycled polypropylene. However, now in their most recent, in the Q3 investor presentation, they're now showing that the Pure 5 Ultra is only 95% recycled. So if it's 95% recycled, that doesn't make any sense. So it's not Pure 5 Ultra. It's not pure. If it's only 95% recycled, that means they're putting some virgin plastic into it. So this whole thing is they're basically admitting that this Pure 5 Ultra doesn't actually exist. Not only does it not exist, they're not even selling any of it. So in this slide, they're basically confirming what we suspected all along, that they cannot get the purity high enough to actually sell Pure 5 Ultra. So what they call Pure 5 Ultra is actually compounded because it's only 95% recycled, meaning they put 5% virgin plastic in it. So that's something that's very important. And that really shows some of the problems of their technology, that it cannot perform as they originally claimed. They cannot make a virgin quality recycled polypropylene. So now let's talk about Procter & Gamble. So Procter & Gamble is obviously a massive company. And remember, PureCycle, they originally licensed this recycling technology from Procter & Gamble back, way 10 plus years ago. And for years, kind of one of the main bull cases of PureCycle is that, they're going to sell their recycled plastic to Procter & Gamble. Obviously, with Procter & Gamble being so massive, them alone could potentially order a huge quantity of plastic. As Ryan explained earlier, this has been delayed. So they were supposed to start selling plastic to Procter & Gamble in 2025. Now this has been pushed back to 2026. But they did say that, so this is what they said in the most recent earnings presentation. They say that they've been doing all these tests with Procter & Gamble, and specifically Procter & Gamble has been testing the plastic to make the lids for detergent bottles. So it's Procter & Gamble sells detergent bottles like the Tide or whatever, and then not the bottle itself, just the lid is they're going to get the plastic from PureCycle. And then according to PureCycle, it passed all the tests, and Procter & Gamble says that it's good, and they're going to start selling it in 2026. However, if you look at it, what they're selling to Procter & Gamble is a compounded product. So it's only 52% recycled. So it's only half recycled. They have to get what the plastic that they're selling for these bottle caps, it's half recycled and half virgin. And again, the reason we believe they have to do this is because there are quality issues and so much impurity in the recycled plastic itself that they have to add half virgin to make it work. So what is the purpose for a company like Procter & Gamble? What's the purpose of buying a recycled plastic? Because the recycled plastic, the whole idea is that it's going to be more expensive than virgin plastic, and that PureCycle would be able to charge a price premium for this. Well, maybe from a marketing perspective, Procter & Gamble can say, oh, we're using a recycled bottle cap, so we're environmentally friendly, and maybe consumers will like that. But the bottle cap is only 50% recycled. And the bottle cap is only a tiny percentage of the total amount of plastic used in the entire bottle. So just the cap is 50% recycled. As a percentage of the entire bottle, the bottle plus the cap, it's like only 2% recycled because it's only 50% of the cap. The cap is probably only like 5% of the weight, probably less. So the entire bottle is going to be 1 or 2% recycled. That's not going to be an effective. That's not going to be an effective marketing gimmick, right? The other thing, if we look at the whole idea with Procter & Gamble, so Procter & Gamble is such a massive company that they're going to be able to order huge quantities of plastic from PureCycle. Well, let's just look at the illustrative volumes that they give for their projections that this is what they give all the way back in Q4 of 2024. And this is what they supposedly expected to sell to Procter and Gamble back in 2025. Now, as we know, this has been delayed. This has been pushed back to 2026. But let's just look at the volumes of these numbers. They originally said that they would ramp up over the course of a year. And by the end of the year, they would be selling 2.5 million pounds of plastic to Procter and Gamble by the fourth quarter. So that was originally supposed to be the fourth quarter of 2025. Now that's been pushed back to 2026. So even if we use their own numbers, 2.5 million pounds is not a lot, because virgin polypropylene costs about 60-ish cents per pound. They claim that they can sell it at a price premium. Now, I don't know how much of a price premium they can actually get, seeing as it's only 50% recycled. But let's say that they can sell it for $1, which I think is very generous. But even if it's $1, 2.5 million pounds of plastic at $1 a pound, that's $2.5 million of revenue. The operating costs of their facility in Ironton is $30 million per quarter. The company's total cash burn is more than $40 million per quarter. So Procter & Gamble, this massive company, according to PureCycle's own projections, after a year of ramp up, they're only going to be making like $2.5 million per quarter when PureCycle is burning $40 million per quarter. So the numbers are tiny. Just because Procter & Gamble is a big company, right? Procter & Gamble probably consumes like 100 billion pounds of plastic a year, right? Some astronomical quantity of plastic per year. Just because they're experimenting with these half recycled bottle caps from PureCycle, that does not automatically follow that they're going to order, some massive quantity. They might order just a small amount, test it out. Maybe they'll use it in limited product runs. Maybe they'll continue with it. Maybe they won't. But why would they continue with it when it's only half recycled and the entire bottle is only going to be like 2% recycled? So it's not really that effective from a marketing perspective. And then, in addition to Procter & Gamble, they claim that they got approval to sell plastic to an unnamed top 5 quick service retail company. So quick service retail means fast food, like McDonald's or Burger King or something like that. So they claim that they got approved for a top 5 fast food chain, where they're going to sell their recycled plastic for the bottle caps, the lids of coffee cups. So you go to McDonald's, you buy a cup of coffee, there's a plastic lid, the coffee lid on top of that. And they say that, we're going to start selling these coffee lids. And it's called thermoforming is the specific application of it. So they have a few different products of this thermoforming plastic that can be used for the coffee lids. All of them are compounded. None of them are Pure 5 Ultra, right? And the compounding is as little as 32% recycled. So when they sell it, it might be only 32% recycled and 60-some percent virgin. And again, the recycled percentage is so low that are these companies really going to pay a big premium to PureCycle because it's, environmentally friendly, but it's only 30% recycled? So I have my doubts of whether or not these companies are actually, this fast food chain or Procter & Gamble are actually willing to pay a big price premium. And now let's talk about the volumes. So in the conference call, PureCycle's CEO gave the following kind of guidance about their expected sales volumes with this Procter & Gamble and this big QSR chain, this big fast food chain. And they also have this carpet customer called Emerald Carpets. So they have these 3 customers. Procter & Gamble in the fast food chain are quite big. Emerald Carpets is pretty small. But between all 3 of them, they say that they expect volume in the range of 40 to 50 million pounds annually. And 40 to 50 million pounds sounds like a lot, but it's actually not that much when you consider the fact that the product that they're selling to these customers, it's only like 30 to 50% recycled. So when they say like the caps, the detergent caps for Procter Gamble, those are only 50% recycled. So that 50 million pounds of product is probably only like 25 million pounds of recycled plastic. And then the other 25 million is virgin plastic that they buy to mix in with their recycled plastic, because that's the only way they can get the purity high enough to be usable. Now, we don't know what the pricing is. Virgin polypropylene is about 60-ish cents a pound. Let's be extremely generous and say that they're going to sell it at a massive premium for $1 a pound for this compounded product, which is only like half recycled. That would be that 50 million pounds of volume. That would only get them $50 million of revenue. And Ironton, their plant in Ohio, is currently running at an operating cost of $120 million a year. And based on their own projections, they're only going to be making like $50 million per year. So that's less than half of the operating costs of Ironton. And obviously, this is not, and obviously there are variable costs too with buying the feedstock, sorting the feedstock, paying the compounders, etc. But the amount of revenue that they're guiding to is quite low compared to their massive fixed costs already. We also have to consider that since this company went public back in 2020, for the past 5 years, they have always overpromised and underdelivered. They have always massively missed all of their projections and timelines. So now, even if we give them the benefit of the doubt, which we absolutely should not, that they're going to sell 50 million pounds annually, that's still a pretty minuscule amount of revenue, and they're still going to lose money in 2026. And we also have to talk about the unit economics. So to date, PureCycle's sales volume has been so minuscule that we can't really calculate, what we think their unit economics or gross profit will be, because the revenue is so little compared to their fixed costs. We can't really make any calculations. But the PureCycle, their CEO, has continued throughout this entire period, has continued to give very optimistic commentary about what their unit economics are going to be. So this is what he said on the Q3 earnings call. Even in a challenging consumer spending and petrochemical environment, we continue to see robust demand and pricing in line with the unit economics we have previously laid out. So the unit economics they previously laid out, back when they did their SPAC in 2020, they gave a presentation where they talked about what they expect their unit economics for Ironton to be. Now, back at that time, they were saying that they were going to make virgin quality polypropylene, which they can sell the Pure 5 Ultra 100% recycled. Since then, in fact, in 2024, the business model completely changed because there were so many quality issues with the Pure 5 Ultra. They had to completely change the business model to do this compounding. Now that changes everything basically about the economics, because it changes the cost, because now you have to go out and buy the virgin polypropylene. You have to pay compounders to compound it. Now they say they're going to make their own compounding capacity, but that's also going to cost money. And it's going to change the volume, right? And it's going to change the price that you sell, because the product that you're selling, you used to be that you would sell a 100% recycled product. Now you're selling a 30 or 50% recycled product. So the pricing would presumably change. So when they change the business strategy from Pure 5 Ultra to compounding, everything about the business model changes. Yet the company absurdly continues to maintain that they're going to make, similar economics and similar EBITDA even after making such a massive change. So that's already not credible. But if we just look, so they maintain that they're going to, even despite all these changes, they're going to continue to make a similar profits from Ironton. But if we just look at the numbers, we can tell that this is clearly absurd. So if you look at this is from their SPAC presentation from 2020. They said that Ironton would have a nameplate capacity of 107 million pounds per year. They said the operating costs would be 29 cents per pound, or $31 million in total. So they said Ironton would cost $31 million per year to operate. Okay. In Q3 2025 alone, 1 quarter, their operating costs for Ironton were $30 million. So the cost has increased 4 times. They said it would cost $30 million a year to operate Ironton. Now it costs $120 million per year to operate Ironton. And Ironton is operating at a tiny fraction of max capacity, and it's still costing 4 times more than they said it would cost. And they claim that they produced 7.2 million pounds of plastic at Ironton in the third quarter. However, I believe that's the compounded product, which is only like 50% recycled. So that means they only made like $3.5 million pounds of recycled product from Ironton in the third quarter. Their nameplate capacity is 27 million pounds per quarter. So they're operating at about 10% of nameplate capacity. Yet it costs them, their operating costs are 4 times greater than what they originally said. So if your operating costs are now 4 times greater than what you originally planned, how are you going to come out and say that, oh, the economics are going to be the same? The unit economics are going to be the same. Obviously, the unit economics are going to be way worse because it cost you 4 times more than expected. Now, the last issue we're going to talk about, actually, there's 2 more issues we have to talk about. One is, so they have their facility in Ironton, which they claim can produce 107 million pounds per year of nameplate capacity. Right now, it's only operating at about 10-ish% of nameplate capacity, but they claim that it can produce 107 million pounds of 107 million pounds of recycled plastic per year. Then they say, oh, we're going to open up all of these other recycling facilities all over the world. And then by the end of by 2029, we're going to get to 1 billion pounds of capacity. That's what they claim, right? Now, and then they're going to make this. Recently, they announced that they're going to make this facility in Thailand. They're going to make one in Belgium, one in Georgia, and then one somewhere else. So there's 4 new facilities that they claim that they're going to make over the next 4 years. They have not begun construction on any of them. They've been talking about them for a long time, but they have not begun construction on any of them. But the one that was supposed to begin construction the earliest was Thailand. So this Thailand facility, they announced it, they disclosed that they were planning to build this Thailand facility in June of 2025. And then at the time, and then shortly thereafter, they released this presentation where they said that they would begin construction in Q3 of 2025. Well, now Q3 is over and they have not begun construction. This is what their commentary was at the Q3 earnings call, which happened in November. They said, this was a PureCycle CEO. The growth plan we outlined to the market last quarter continues to progress. Since announcing the Thailand project earlier this year, key feedstock LOIs have been signed, and the amount of material available appears to be more than required to run the facility at full capacity. That's basically all they said about Thailand. So they say, oh, they went to Thailand. They talked to some of the feedstock providers. That's the companies that collect recycled trash that they would potentially sell to PureCycle. And they signed some probably non-binding letters of intent. So they basically done nothing in Thailand. They went and talked to some people in Thailand. That's all they've done. They have not laid a single brick. They have not started construction. And it doesn't look like they've signed any binding contracts to even begin construction. They claimed that they would begin construction in Q3. We're now in November. We're well into Q4, and they haven't even begun construction. Now, I don't think they actually have any intention of building this Thailand facility or, frankly, any of their other facilities. And I'll tell you why. In June of 2025, in conjunction with them raising, in June of 2025, in conjunction with them announcing their intention to build this Thailand facility, they also raised $300 million of preferred stock. So they raised $300 million and they say, oh, we're going to use this $300 million plus a bunch of other capital that we expect to raise in the future. And we're going to use this money to build the Thailand facility and all these other facilities that we plan to build in the future. Right. So really the ostensible purpose of this $300 million capital raise was to fund the Thailand facility. And they said that they would begin construction very quickly. In fact, they still haven't begun construction. But that $300 million, they're already burning through it very fast. So at the end of the first quarter, they were down to like $20 million of cash, and they burn like 40 million a quarter. So at the end of the first quarter, they were almost out of cash. They needed to raise additional capital. So then in June, they raised the $300 million, and that's why we see the big increase in their cash balance. at the end of Q2 because they raised this $300 million. Now, they needed to raise capital anyway, just to fund their continued cash burn at Ironton. But if they come out to the market and say, oh, we need to raise a bunch of money because we're losing money at Ironton, and we expect to continue losing money at Ironton for the foreseeable future, or for at least the next few years, well, that looks very bad because they've been, saying for the past year, oh, we're, right on the verge of signing these big purchase orders, which are going to bring us to profitability, right? So if you just say we need to raise capital to fund our continued and ongoing losses at Ironton, that looks bad. So instead, they announce, oh, we're going to build this new facility in Thailand. We need to raise this $300 million to pay for Thailand. By the end of Q3, their cash balance had declined from that $300 million they raised in June. Their cash balance had declined down to $234 million. So by the end of Q3, they had already burned through $66 million of that capital they raised, and they have not yet spent a penny in Thailand. And we're now in November, so they burned even more money in the past month, and they still have not spent a penny in Thailand. And they're burning through this cash very quickly. Ironton alone is burning, their current cash burn is like $170 million a year. So this $234 million that they have, they're going to burn through that by the end of 2026. And even if we give them the benefit of the doubt and say that they're going to get 40 to 50 million pounds of sales volume in 2026, they're still going to lose money. So they need this money to burn at Ironton. So they're not going to have money to spend at Thailand or Antwerp or anywhere else. So I don't think they have any intention of actually building this Thailand facility or any of these other facilities. It's just an excuse for them to raise capital, which they need to fund their existing cash burn at Ironton. And then finally, this is the last point, which I think is still very important. So this kind of goes to the crux of the entire bull case of PureCycle. Now, as we explained earlier, let's take the example of that thing they're selling to Procter Gamble, right? Or the thing that they plan to sell to Procter Gamble. They plan to sell 50% recycled plastic. So they're selling a compounded product that's 50% recycled that Procter Gamble is going to use to make the detergent caps. So the cap itself is 50% recycled. The entire bottle is going to be like 2% recycled, 2 or 3% recycled, right? So from a consumer marketing perspective, no consumer is going to pay a price premium for an environmentally friendly product that's 3% recycled. But the entire bull case that PureCycle talks about is like, oh, all of these states are implementing regulations that at some point in the next few years are going to require plastic manufacturers like Procter Gamble and others to use recycled plastic in their product. And because that's going to be mandated by the government, well, then Procter Gamble and all these other companies, they're going to be forced to purchase PureCycle's, recycled plastic, and they're going to be forced to pay a premium, and that's going to be great for PureCycle. And in the most recent investor presentation, PureCycle put out this map and say, see, all of these states have state laws that will mandate for companies to use recycled plastic. Now, let's just look at California, because California is obviously the biggest of these states by far. So it makes more sense to look at them instead of any of these smaller states. So California, they indeed had a law that would eventually mandate manufacturers to use recycled plastic. So in June of 2022, California Governor Gavin Newsom signed SB 54, which will cut plastic packaging in foodware by 20% over 10 years, require all packaging in the state to be recyclable or compostable by 2032, and require 65% of all single-use plastic packaging and foodware to be recycled in the same time frame. So that's really the important part, the last part. So this law would require 65% of all of single-use packaging to be recycled. So if you have this, mandate, well, that will mean that the manufacturers will be required to buy recycled plastic, and they will potentially be required to buy that plastic from PureCycle, if they have to use polypropylene, and PureCycle is supposedly the only one that can make that. Now, first of all, if you look at what PureCycle is actually selling, it's 52%. And then this mandate is for 65%. So PureCycle wouldn't even be able to make the mandate because the quality of their recycled product is so bad. They can only use, in the case of Procter Gamble, they could only do 50% recycled. So even that wouldn't be enough to meet the mandate. But the more important thing is, it doesn't look like this mandate's even going to happen because this thing, they signed the law in 2022. It was supposed to go into effect gradually over time and eventually taking full effect in 2032. So this was envisioned to take 10 years to happen. However, it looks like it's actually not going to, it might not even happen at all because in March of 2025, a lot of these plastic manufacturers lobbied Gavin Newsom, and they told Gavin Newsom, hey, this is going to cost way too much money to try to switch to recycled plastic in this time frame, and it's going to be too costly for us, and we're going to have to raise prices on the products that we sell to consumers. So this is actually like not a good idea. And then Gavin Newsom said, yeah, you're probably right. That's not a good idea. And then so he delayed the implementation of this plastic mandate, and he told the California regulatory body to come up with new rules that are going to be cheaper and easier for the industry to comply with. So the idea that all of these states are just going to have all these plastic mandates and they're going to force manufacturers to pay premium prices to PureCycle and then pass that cost on to the consumer is probably not even going to happen because, as we see here, just because a state has a law in place, that law can be adjusted or postponed or changed based on pressure that they get from lobby groups. And that looks like exactly what's happening in California. So this whole narrative that there's going to be massive demand, a massive regulatory tailwind, I think is highly questionable. And then if this doesn't happen, if we don't get the regulatory tailwind, then what's the purpose of all this? Why would Procter & Gamble pay a price premium for a 50% recycled detergent cap? None of this, none of this makes any sense. So that about wraps it up for everything we have to talk about PureCycle today. As always, if you have any opinions or thoughts about the company, please let us know in the comment section below, and we will see you all on next week's video.